Good afternoon. Good to see everyone. We're going to get started in just a minute. Okay, good afternoon. Hi, everyone. Good to see you and hear you. We'll have time for questions at the end of the call so we can all hear each other. This is Dagny from NACO, the Executive Director. Can everybody hear me? Yeah, okay, thanks. Thanks again for joining us. Looks like we have a lot of folks on the call today from most of the rural counties and perhaps Washoe County too. This is the NACO workshop on fiscal compliance with the CARES Act Coronavirus Relief Fund dollars that all counties are receiving. The purpose of this workshop is to provide support to counties on managing these dollars. These, of course, are a part of the $1.25 billion allocation of coronavirus relief funds from the CARES Act that Nevada received. And as you all know, using this money is limited to expenditures that can be directly attributed to COVID-19. NACO has created a guidance document that I believe you all have and that's on our website with a list of some of the things you can and can't spend these funds on. You can also find more details on that in the first PowerPoint presentation that I believe you all received that Chad Atkinson will be going over in a few minutes. Today, however, we want to provide you with information that's a little more detailed than that. We want to help provide you with information that will assist with fiscal compliance of these dollars and tracking of these dollars. Our speakers will talk about how to prepare to address these dollars in your audits and record keeping. Of course, we've been stressing that everyone track all of your expenses, receipts in detail that can be attributed or that you might use these dollars for. And that perhaps you dedicate an employee or hire a contractor to help you do that with these funds. And of course, these funds can, as a reminder, be used for the salary of that employee for their time that's dedicated to tracking these funds, as well as for a contract with someone to help you, a contract for someone to help you with all this. And at the very end of the presentations, we'll talk about that a little more and give you some suggestions for contractors. So in addition to the importance of tracking how you use these dollars, today's panelists will talk about the single audit rule, procurement or proper purchasing with these federal funds, as well as best practices for subgranting to nonprofits. So if you want to share these dollars with other entities or nonprofits in your community, we'll walk you through that a little bit. A few housekeeping things. This is being recorded, so be mindful that you are being recorded. But that's also so that we can provide a recording of this workshop on NACO's website, along with all the materials that we will present, so that you'll have that for future reference or to share with anyone else in your counties who you think might want to see this, these presentations. If you did not receive an email from me earlier today, but would like to be on the email list for this as well as future presentations that we might do with any updates, please email myself or Vince and ask to be on the list for fiscal compliance for CARES so that we can have a complete list and share information with you going forward. In addition to the presentations that we're going to have today, something else that I shared in my email that I sent earlier is the most up-to-date Treasury guidance for the funds. So I put all of that in one document for you with the most up-to-date, frequently asked questions. The Treasury guidance is pretty simple and straightforward, but it's been updated a number of times. So that's the final all-inclusive version that you've got. Also, part of that document's a memo that the Treasury sent to all direct recipients. So the state is the direct recipient, you all are subrecipients, on what they expect for reporting and compliance. I think based on that, the state, and this was just announced, I think on Saturday, will also require some compliance from you all in the form of reports and certifications and some compliance. And we actually have a representative from the governor's office who's going to join us quickly before we go into our presenters to talk a little bit about what the state is going to be requiring from you all and what their process was. I believe that you all should have received an email from the governor's office, the governor's finance office, on Saturday with the document outlining what they will need from you. Leslie, are you on the call? Are you on the Zoom?
Yes, I'm here. Video unable to get that going, but that's okay.
Okay. Well, Leslie, could you please introduce yourself to the group and just give us a brief overview of what the governor's office is going to be looking for from everyone?
Yes. Hi. Thank you for having me here today. It just coincidentally worked out in a very wonderful way that we were able to send out some information to all of our counties and city governments that are going to be receiving allocations from the Coronavirus Relief Fund. We do usually refer to it as Coronavirus Relief Fund simply because there's a lot of confusion with the CARES Act, because there are multiple streams of funding that come from the CARES Act. And so again, we very much are specifically managing the Coronavirus Relief Fund. So you should have all received, and I believe it was on Saturday morning, we had a packet that was sent to the local governments that it included a cover letter, which basically provided the details on the allocation amount to be given to each local government. What we also included in the packet was a Nevada CRF allocation amounts for local governments. So again, it's just a reference sheet to show how much the allocations were. And then we also had an eligibility certification letter. This is going to be the really important one because the certification letter is really what's going to allow you to move forward. It does need to be notarized, or it has to have a notary sign. And so what we're looking for on that is for you to take a look at that eligibility certification letter and get that signed and notarized, and then we can start expediting things with an email version of this, but we will need a hard copy version mailed to the governor's finance office so that we have that on record. The other thing that we're going to need is we have a terms and conditions document, and that gives all of the details. Hopefully we've provided a lot of information, a lot of the information that you guys have provided as well, luckily through the Treasury guidance and all that, but we've summarized it in the terms and conditions, and we've provided our other terms and conditions, information in there as well on reporting and also planning and things like that. So we will need a signed acknowledgement that you've read that document. And then we also have, as part of that, an activity reporting worksheet. And this is the reporting that you will, worksheet that you will use when you've used the Coronavirus Relief Fund in your arena. And you're just going to record and report that back to us. And then the final thing that is also in the terms and conditions is that we are requiring a very high level plan to be submitted. Whenever I say we require a plan, I know everyone's cringing, thinking, oh, what bureaucracy am I going to have to go through now? Please note, it is a very high level plan. We have provided certain questions, and all you have to do is answer them and just provide us a little brief summary. In fact, we do not want an 18-pager. We've said 4 pages seems like as much as we want, So certainly we do need to have those that planning information, but it is a very high level. So those are the items that were provided. If you have not received those items, please, by all means, if I'm not sure if you're going to be sharing my email, certainly you can contact me directly, but we do have a general email for all of questions related, and it is covid19@finance.nv.gov. And if you email, we will provide the packet. You should have gotten it though, but by all means, if you didn't receive the email, let us know and we'll send over the packet. The other thing is we will be posting this on our website as well. We're going to be having those documents loaded today by the close of business, and so those will be available on the website as well. So I hope that's a good overview. Are there, did I, anything else I need to cover?
Leslie, thank you so much. And we've been encouraging everyone to work on those plans. And I think a lot of the counties already have a pretty good idea, have been working on those for a couple weeks. Just really quick, I don't want to take too much time on this, everyone, because we've got three really good detailed presentations. But if anyone has a quick question for Leslie, we can go ahead and do that. We'll take 2 to 3 questions. Just since we've got her on the line. No? Okay, I saw what Leslie sent out to all of you.
I have a question. I'm sorry. Do you want invoices with these reports, these worksheets?
At this particular point in time, the way we have it structured is that you're going to be reporting the information to us. You know, if we do require any kind of invoices, we will let you know well in advance. But we do expect that you will be keeping everything as if we were to pick up the phone and say, we want this, you know, and I think a lot of the language you'll see in the documents we provided basically state that it needs to be readily available. You will be an extension of the state. That's how we're looking at it, because ultimately the state is going to be essentially footing the bill on this if it is used incorrectly. So we certainly want you to have all of that documentation in place should we request it or require it.
Anybody else? Question for Leslie before we get started? Okay, Leslie, thank you so much for being on the call today and for sharing information. It was good timing that we connected and that you released your information from the state on Saturday. And I think everyone probably has your email if they got an email from you, but I can share that with anyone who needs as well, so that you've got Leslie's contact for any questions for the Governor's Finance Office. So I want to go ahead and introduce our speakers now. So I will introduce all 3 of them, and then they'll go ahead, and what we'll do is we'll have try to hold most of our questions until the end, and we'll have time for questions and answers of our speakers at the end. So first, Chad Atkinson will speak. He is a partner at the firm of Hinton Burdick. Sorry, Chad. He'll speak about general fiscal compliance and the CARES dollars, and I believe about the single audit rule. He's a CPA and has a master's in accountancy from the University of Utah. He's got more than 20 years of audit experience. And he's specialized in audit services and has extensive experience in providing financial and compliance audits for nonprofit organizations and local governments. He's served a wide variety of clientele, including counties, municipalities, special service districts, construction development companies, and other business entities. And he's got over 15 years of experience working with Nevada counties. Following Chad, Terry Willoughby will speak. She is the CFO at Douglas County, and she will follow up on a few things that Chad discussed, and we'll also talk about procurement. Terry's worked in municipal finance for over 20 years in capacities from the assistant comptroller to finance director in various organizations, including the county and city of Riverside, California, and the cities of Barstow and Menifee in California. She's a former board member of the California Society of Municipal Finance Officers and is active in the Government Finance Officers Association. She graduated from Cal State San Bernardino in business administration and accounting, and she has a master's of public administration. Following Terry, Gina Rackley, Humboldt County Comptroller, will talk to the group about distributing money to nonprofits. Gina has worked in local government finance for 29 years for the city of Winnemucca and then for Humboldt County. Gina was the Humboldt County Treasurer for 10 years before transferring back to the Comptroller's office, where she first started for the county in 1999. She's very active in the Nevada County Fiscal Officers Association and is currently serving as one of NACO's representatives on the state of Nevada's Committee on Local Government Finance. Gina attended UNR and graduated from Great Basin Community College with a degree in business administration. Finally, at the end of the presentation, excuse me, Alan Kalt, NACO's fiscal officer and the CFO of PoolPact, will provide the group with some information on contractors that you could use to help with tracking of your CRF CARES dollars. So I will go ahead and turn it over to Chad for his presentation. You should be able to see his slides on your screen, but if not, each of you should have them in your email as well. chat.
Okay, can everybody hear me okay? All right, I see some nods. I'm gonna get my slideshow started here and share my screen. Okay, can everybody see those okay? Slides are good to go? All right. First of all, I want to thank NACO for the invitation to participate in your workshop today. I guess I'm the bad guy on the call. I'm the auditor, and so I get to share a few things that are related to compliance, which I'll get into in a few minutes, but happy for the invitation. Just a few things as we get started here. I don't have my video camera going today, so I thought I'd share a picture of my family. They're much more good looking than I am. So there's a picture of my family, a few things about me, a few things that I enjoy outside of work, and a few things that I consider success at work. So you can take a look at those. Right now I'm feeling a little bit cramped on the traveling. Can't do much of that in our current environment, but hopefully that will change in the future. So Dagny's already gone over a lot of this, but just as background, the CARES Act was put into place in 2020. A significant portion of that money became the Coronavirus Relief Fund, which was passed on to the state of Nevada and will now be passed out to the counties, who will then distribute funds to other local governments under their jurisdiction, and then possibly to nonprofits eventually. So when we receive these funds, we always ask the question, what's the catch? And I hope to kind of cover that in my presentation today. I'm mostly going to be covering it from an auditor's point of view and trying to give you kind of a textbook layout of the requirements that are there for you to follow. A lot of that is going to be covered in the documents that have just been handed out by the state. The state has given you specific guidance, I think, on Saturday, which I haven't had a chance to really look through yet. But that's the documents that are going to be critical for you to pay attention to and follow. So you'll notice that my presentation has about 45 slides, but I'm just going to reassure you right here at the beginning of this presentation that I'm not going to go through all of those in detail. As I prepared the presentation, I prepared the first 20 or so slides, not knowing what had already been distributed to the NACO members. And so slides 5 through 19, I'm gonna just briefly kind of skip over, but you should know that those, the information in those slides was taken directly from the Treasury's website. And that's kind of the foundation documents that all organizations are looking at, right? The state and local governments and anybody that's receiving funding through the Treasury Department, in this case, should refer back to those as foundation documents, along with the question and answers that are posted there on the Treasury's website. That's been updated at multiple times, I think maybe 3 or 4 different times. And that made it a little bit difficult preparing this presentation, just because information is on the move here and compliance requirements are not necessarily pinned down yet. So I recommend that you look at that as your playbook. So going on to just a couple of things here on this slide. There's 3 basically principles that the Treasury Department's handed out as part of the Coronavirus Relief Fund. I think the first one is the most important. As I've read through all the guidance and all the question and answer information, it basically lays out different information for you, and then it says, as long as it's related to the coronavirus emergency or the public health emergency, then it can become an allowable cost under this program. So pay attention to number 1. It has to have a tie. That's the kite string, so to speak, for this funding. So that's the only thing I really wanted to point out on this slide, is to make sure that you're doing everything with that in mind. And then back to this slide just for a second. In that Treasury document, there were 3 principles given. And then in my slides, in the next few slides, I lay out here what are necessary expenditures according to the Treasury, and I've underlined a few things, but I'm not going to cover those. So if you have an interest in those, you can take a look at those later. The same thing would apply for costs not accounted for in the budget, most recently approved as of March 27th. I've just gone through and highlighted a few things that I thought were important. Then we get down to the list. As I click through these, you'll find the non-exclusive examples of eligible expenditures. Of course, you've got medical expenses and some examples. You've got public health expenses and some examples. We've also got payroll expenses for public safety, public health, healthcare, human services, etc. Again, it has to be related to the COVID-19 public health emergency. Same thing with expenses of actions to facilitate compliance with COVID-19. They list some examples here for you. I'm going to click through these. And then also they gave a list in their guidance, the Treasury did, for examples of ineligible expenditures. I think it's helpful to look at both sides, what's eligible and what's ineligible. So take a look at those items, either in this document that I've given you or in previous documents given out by NACO. Okay, so on the accounting side, this is an accounting and reporting item that I think is very worthwhile. The GASB, the Governmental Accounting Standards Board, issued a technical bulletin during June, and this is related to how the funding should be treated. And I highlighted a few things in my research that are on this slide. They have said in the documentation pretty clearly that this is not a grant program. This is an other financial assistance program under the CFR. So that's an important distinction. Down lower in this highlighted information, you can see that CRF funds are identified as voluntary non-exchange transactions, subject to eligibility requirements rather than purpose restrictions. Okay, so all of this is accounting jargon, and I'll get to the nuts and bolts of this in just a moment, but wanted to also reference here that they're referring to GASB statement number 33 and the eligibility requirements for non-exchange transactions here. So what does this all mean for accounting, I guess, is probably my next thing. I pulled in a little bit of the eligibility requirements for GASB 33 for voluntary non-exchange transactions, and kind of went down those requirements to see about when are we going to record this as revenue. What fiscal year will it fall in? Will it be fiscal year 20? Will it be fiscal year 21? How will we handle that? So you can see the requirements that they have listed in the standard. First one is that they have to designate the characteristics of the recipients. There has to be time requirements involved. There has to be reimbursements, and then contingencies. And then I've put my answers to each of these in the red that you can kind of follow. So we know that in the guidance provided by the Treasury, we know the time requirements are pretty well stated. That's March 1st through December 30th, 2020. So that's been accomplished. They've also item A here talks about the required characteristics of the recipients. That's a state or local government. That's been specified. In item C, it talks about being a reimbursement or expenditure-driven basis, and the recipient has incurred allowable costs under the application program. According to my understanding of this, everybody that's receiving these funds basically has eligible costs that would apply to this CRF fund. So I think we're in good shape there. And item D talks about contingencies that have to be put in place. And as far as I'm aware, unless there's something in the state documents that have been given to you, there's no significant contingencies. So I put together just a basic accounting of how this would, that we're going to be recommending to our clients. This is based on our understanding and research of the standards on how we would treat this with our clients. But I would encourage you to be in communication with your auditor, whoever that is, and make sure you're on the same page with this. But in fiscal year 20, I've just listed out how will the expenses be recorded and how will the revenues be recorded. So you're going to have COVID expenses going on, and you've had those going on ever since the outbreak. Those are your debits, right? And you're going to have credits for either cash that you've paid out or payables that have been incurred. Those are pretty straightforward. You're going to capture those from March 1st through June 30th. And as you track those, you're going to also have an offsetting revenue that you'll record. Okay, you're going to have a debit entry for due from the state for the expenses that you've incurred up through June 30th, and that will match your expense. The revenues and expenses will match. So let me just back up really quickly, just so that this makes sense for fiscal year 2021. If you see that in this slide here, item 6 says that when we receive this, these resources through the state, that we should record these as liabilities until the eligibility requirements are met, including the incurrence of eligible expenditures. So this is where the liability comes into play. And I'll just skip back to my slides here for fiscal year 2021. So in fiscal year 2021, you're going to continue to, actually, you're going to receive funds from the state in fiscal year 2021 after these agreements are signed and you work out the details with the state. You're going to receive funding. And in that, you're going to receive a cash, that's going to be your debits. Your credit is going to be offsetting some of your receivable that you recorded at the end of 20. So that's going to offset the due from state that we recorded in 20. And then the remainder would go into a liability account, a CRF liability account, until other eligible expenditures are incurred. So that's what you'll do with the receipt of the funds once you get it. I'm not sure how it's going to be distributed. I think, I don't know if you'll receive it all at once or if you'll receive a portion of that as you go, but that's what I would expect to see. And then in fiscal year 21, you're going to have continuing expenditures that continue on from the first part of the fiscal year through December 30th of 2020. And you're going to continue to incur those expenditures. And then as far as recording the revenues for that, that's a little bit more straightforward. You'll then have the revenues or the funding sitting in your liability account, and you'll just simply move that from your liability account into revenues as you incur expenses related to COVID-19. So hopefully I explained that well. It's a little bit hard. I can't see everyone's faces and see if you're following this, but I tried to outline this in just a very simple, basic way. And if you have follow-up questions on this, you're welcome to reach out to me afterwards. So I'll keep going along here. All right, so on the single audit requirements, this funding is subject to single audits. And a single audit, many of the counties already have single audits from year to year, so I don't need to tell you necessarily what that is. So those counties that are having a single audit from year to year, you can just push pause for a second. I'm going to talk to the other smaller counties that maybe don't receive federal funding very often. So this funding may cause you to have a single audit where you may not have had a single audit before. If you have federal expenditures that exceed $750,000 in a fiscal year that's related to federal funding, federal expenditures, then you'll you'll fall into a single audit category and have to have a single audit. And this is a compliance audit for federal funds. So it may cause you to have a little bit more work done by your auditors, a little bit more compliance test work, more reports to file, more things to do with a single audit. So just be aware of that if you're a smaller county. This may take you up over that threshold. Okay, so the other thing that I want to point out here too is perhaps you will receive this funding and it may not put you over the $750,000 threshold. So you may not have a single audit. That doesn't mean that you're exempt from the requirements under uniform guidance. You still have federal funds that have come to your organization. They still could be audited by the Treasury Department. The Treasury Department could decide that they're going to come out and look and see how you've spent these funds. So it's important to know that you're not exempt, that you need to still follow the regulations, even though you may not have a single audit performed by your auditor, your year-to-year auditor. Okay, so as we discussed previously, this federal money does come with strings attached. It has compliance requirements that are normally provided. Let me back up just a second. So compliance requirements are normally provided with the federal funding when the federal funding is distributed. In this case, we have this COVID-19 situation where the funding was kind of handed out before the compliance requirements were determined. So right now the regulators are trying to figure out what the requirements are. I think you got a pretty good list from the state on Saturday that I think you can follow. But the final guidance for what the compliance requirements will be has not yet been determined. As an auditor right now, I don't know what the compliance requirements are. I don't know what the final compliance requirements will be. And those are not expected to be issued until probably August or September, the end of September. So this is going to cause a slight delay in your auditor's ability to go through and test these funds. So you should be aware of that. It doesn't mean that your audit necessarily will be late. It just means that your auditor, once he gets those compliance requirements, he's going to need your assistance to go through and test those compliance requirements once he gets the final regulations. Okay. Let me just touch on really quickly. When federal funding is received, like I mentioned earlier, you normally have compliance requirements. And right now there are basically 12 areas of compliance that the federal funding can have compliance requirements in. It doesn't mean that all 12 of these apply to every federal situation. There's usually a few categories that are more important than others. And so the question here is, with the Coronavirus Relief Fund, what are the most important categories to be focusing on? And based on the information that we've received thus far on this the CRF funds, it looks like obviously the way that you spend these funds, the allowable cost area, is definitely an area that I think your auditors are going to pay attention to. Have you followed and documented the three principles that we covered earlier? Is this related directly to the public health emergency? Was it not included in my budget? Was it incurred from March 1st through the end of the year? Those are the kind of things that your auditors are going to be paying attention to there on allowable costs. I think there's also specific guidance right now on the CRF funds that says that you're going to be, if you pass this money through to anybody else below you, whether it's a city or a service district or a nonprofit, you're going to have requirements related to subrecipient monitoring. So that's item M on this chart. Subrecipient monitoring, allowable costs appear to be important, and also the period of performance. Are you incurring these expenditures during the time requirements that the Treasury has outlined? Is it March through December, or there'll be some testing on that. I'm sure your auditors will look at. And then also on reporting, it looks like reporting requirements are going to be in place for this grant. Specific categories on where you spent the money will be requested of those that give you the money. So in this case, I think the state, I haven't looked through their documents yet, but I'm guessing they have a reporting document that lists categories and things like that that you'll need to provide back to them. So those are just my guesses on the areas I think that will be important for this grant. Again, the final compliance supplement is not expected to be out for a little while yet. Okay, so the two things that are listed specifically in the Treasury guidance that that all need to pay attention to are this section 200-303, which is internal controls, and then subrecipient monitoring, which I'll cover in a minute. But first on internal controls, this is straight out of the uniform guidance. This says that the non-federal entity must establish, and must means must, that's why it's underlined, establish and maintain effective internal control over the federal award that provides reasonable assurance that the non-federal entity is managing the federal award in compliance with the federal statutes, regulations, etc. So this applies specifically to this grant. You're going to need to set up compliant controls that will help you to comply with the regulations. Going back to this slide, I just want to point out the difference between controls over compliance and controls over financial processes. Controls over financial processes might be segregation of duties and making sure you have checks and balances and things are kind of going through a process financially that may be a little bit different from having controls over compliance. So what that means is if on this matrix, if subrecipient monitoring is important to the federal grantors, and they've specifically said that they're going to focus on that area, they want to see what your controls are over subrecipient monitoring specifically. They're not so much concerned about the checks and balances in the financial area. They're concerned about how are you going to monitor your subrecipients. So just to point out that distinction, sometimes it's a little confusing on the controls, but you're going to want to make sure you identify the areas that are important to the federal regulators and then have controls in those areas. Okay, so it says in the guidance that internal controls should be in compliance with two sources. It says that it should be in compliance with the Green Book, which is issued by the Comptroller General of the United States, or in accordance with COSO. And I wanted to point out here that should means it's recommended, but it's not has to be in, it's not a mandatory thing if it says should. This means it's a best practice. So really you could read this uniform guidance that I have in my slide and you could set up controls according to this uniform guidance that's listed here and you would be okay. But just for the sake of discussion, I wanted to put in here, the Green Book is made up of 5 different areas: control, environment, risk assessment, etc. And then it has 17 different principles. Okay, so there's a lot to digest here, and coincidentally, or probably they've probably made it this way, the COSO is also 5 areas and 17 principles they're very similar. So setting up an internal control system for compliance, you can refer to these documents and they will provide you with examples and instruction on how to do that. The other thing that is helpful in the internal control area is at the top of this slide, I've got listed that you should see part 6, which is internal controls in the OMB compliance supplement for 2019. That compliance supplement for 2019 contains examples and illustrations on what controls should look like. And so that's a good practical reference for controls over compliance. Okay, so I've covered item A, which is under internal controls, and now we're going to cover the other items in uniform guidance that are required under this grant. So item B is to comply. You have to set up controls to comply with federal statutes, regulations, and the terms and conditions of the federal awards. Okay, item C is you have to have a way to evaluate and monitor the non-federal entities' compliance with the statutes and regulations. Item D is that you have to take prompt action when instances of non-compliance are identified. And item E, you have to take reasonable measures to safeguard personally protected or protected personally identifiable information and other information the federal awarding agency or pass-through entity designates as sensitive. So these A through E are your requirements for internal controls over this federal grant. This is specifically spelled out by the Treasury that they want to see these internal controls put into place. I'm sure I'm generating a lot of questions, so I'll try to get those at the end, but we'll keep rolling forward here. And on internal controls, I would just recommend that to the degree you can, keep it simple. Simplicity is the ultimate sophistication. Don't get too complicated. I know there's a lot of resources that I'm throwing out at you here, but keep it simple in this case. I think I've listed here this internal control suggestions that I have for you, which are on this bullet point, the second bullet point, determine the personnel that will oversee the grant. Make sure you have at least 2 people in your organization that are familiar with the grant. Perhaps you might break up their responsibilities. Perhaps one person will be in charge of authorizing. Perhaps another person will be in charge of the record keeping. Just have more than one person involved here so that you don't have an isolation with one person on this grant. Make sure that there's multiple people there. On bullet or item number 3 here, authorization, record keeping, and custody of funds. As you handle these funds that come to you, make sure that authorization and record keeping and custody of funds are kind of separated out to the extent possible. That's your segregation of duties. Those are the key 3 things that you need to break up. So keep that in mind as you set up your system for receiving these funds. I've already touched on this a little bit, but you need to document the big 3. I would suggest in your documentation, you have a clear way to document how this was necessary due to the public health emergency, how it was not in your budget, and then the time requirements for when these expenditures were incurred. Put all of this information there for your auditors. That way it's simple and easy for them to look at, and you also have a documentation trail for any further audits that may come from a regulator. I'm recommending or suggesting that you look at your CRF activity in your general ledger. So you're going to have transactions going through your general ledger. You may want to consider setting up maybe a separate department for these, or a subsidiary ledger of some sort, some way to track this information so that you can break it out from your normal activities. You may need to do some journal entries to kind of move everything over into one area so that it's easy to identify. And then finally on this slide, I would recommend that you retain your records for 5 years, and I believe that's required in the documents that I've seen thus far. So you're going to hold on to your information in case there's a subsequent audit that comes into play. Okay, so we're going to switch gears now and go to subrecipient monitoring and management. This is the other thing that's specifically called out in the CRF funds that you need to pay attention to. There's 3 sections here that it covers. There's subrecipient and contractor determinations, requirements for pass-through entities, and fixed amount subawards. I'm only going to cover the requirements for pass-through entities. You will need to probably pay attention to this subrecipient and contractor determinations as you go through and utilize the funds, but I'm not going to spend as much time there. I think it's pretty straightforward in the uniform guidance to kind of determine the difference between those 2. So I chose to spend my time on the requirements for pass-through entities. And I will just say that I'm going to cover these requirements just kind of out of the textbook. But then I think you're going to see this specifically later on when Terry and perhaps Gina discuss this, and also in your the information that was provided from the state. I think you're going to see the elements of this in all the documentation that's going to be shared or discussed. So it says that all pass-through entities must, and then it says item A here, ensure that every subaward is clearly identified to the subrecipient. And then it says basically that you have to include all of these things in your federal award identification under number 1. So you're going to have the subrecipient's name, the subrecipient's unique entity identifier. It has a kind of a laundry list here of things that you need to include if you're going to pass through the funds to another organization. So I won't read all of these, but under number 1, we'll just keep going down. Talks about the period of performance, any obligation, your current obligation, what the amount committed to the subrecipient is. If you have questions on any of this, we can try to answer this later on, but there's some definitions that you'd have to look at on some of this wording. And I'll just keep going down here. You have to identify the CFDA number and the name, the pass-through entity, must identify the dollar amount made available under each federal award and the CFDA number and time of disbursement. You have to identify whether the award is an R&D award. In this case, it's not an R&D award, that's research and development, so that would be excluded. This item here at the bottom of this slide, the indirect cost rate, if there was one. Right now, all I've seen is some question and answer on an indirect cost rate. I don't know that anybody's really pinned that down yet. But if there was an indirect cost rate available, that would be identified in the document that you give to the pass-through. Okay, so that was item number 1. Okay, the other requirements for pass-through entities are fairly straightforward, but you've got 2, 3, and 4 listed on this slide. All requirements imposed by the pass-through entity on the subrecipient so that the federal award is used in accordance with federal statutes and regulations. So whatever you're passing through to a subrecipient, in this case, I think all of the requirements of this grant are basically being passed down to the subrecipients and the sub-subrecipients. So I think they're all going to roll downhill essentially. So you want to make sure that those are passing through correctly. If you have any additional requirements that the pass-through entity imposes on the subrecipient, so that in the case of a county, if you have something else that you're going to require of the subrecipients, you have to identify that. And then we already talked about the indirect cost rate kind of being in motion right now, so we'll skip number 4. You have to have a requirement, there's a requirement that the subrecipient permit the pass-through entity and the auditors to have access to their records. And then item number 6, any other appropriate terms and conditions concerning closeout of the subaward. I did notice in my brief review of the state's documents that they have some information on how to close out the award as well. So the people of the state are obviously looking at this information as well as they pass through to the subrecipients. Okay, so item number B, as you consider potential subrecipients of the county, you're going to want to look and see what experience they have with federal funds. Okay, have they had a federal single audit before? Are they familiar with the requirements, the compliance requirements that surround federal funds? How are you going to work with that? You know, or, what risks are created is basically what this step is asking you to do. You need to look at the risks that are there. If they have any new personnel, that may be something that may be of concern to you. And then let's see, let's finish these. We have to pass through the entity and, excuse me, those requirements that we have to be passed through to the subrecipients as mentioned before. Actually, I think I went backwards with my slides. Okay, let's go forward. On item C, You have to consider imposing specific subaward conditions upon a subrecipient. So if you have, after you do your risk assessment in B and you take a look at the pass-through entity that you're, or the subrecipient that you're considering giving funds to, you have to kind of consider whether you need to have some additional conditions in there. You also, in item D here, you have to monitor the activities of the subrecipient. So that might include reviewing the financial performance and reports that they pass through to you. It might involve some follow-up and appropriate action based on some of the risks that may be outstanding. Okay, then item E here. Depending upon the pass-through entity's assessment of risk posed by the subrecipient, described in paragraph B, you may decide right at the beginning that your subrecipient may need some technical training and assistance. So you may receive these funds and then say, oh, we really want to give this to this nonprofit organization, but we may need to have them come in for a little training course on how this works. You may consider doing some on-site reviews depending on the risks that you identify. And then also this item number 3, agreed upon procedures engagement. This is kind of a limited scope audit engagement essentially. You may pass through these funds to the subrecipient and then tell them that you're going to perform a kind of a limited scope audit later on as they expend the funds. And then item F, verify that each subrecipient is audited as required by subpart F audit requirements. So the subrecipients will fall under the audit requirements that are passed down. The primary recipient right now is the state. That's why they're going to be monitoring the counties very closely, and they're going to expect the counties to monitor any subrecipients of the county very closely. So that's kind of how it's the picture that's shaping up here with this grant. Okay, so then on reporting requirements, from what we have seen thus far, and I think Dagny was able to obtain some information from primary recipients, which are larger local governments. They actually got some information from the Treasury Department on what reporting requirements will be for them. It looks like quarterly reporting is going to be required on this grant. And it looks like, as I've listed in my slides here, I think these are the areas that are going to be required. You're going to have additional reporting requirements on, and you're going to have to keep track of. So you may want to consider setting up your accounting system to kind of deal with these different categories and to capture the information. Okay, then I have some resource slides. I think I'm kind of to the end of my content here. The references here should take you to the foundation documents that we talked about and answer any other questions that you have. So I'll turn it over now to, this is my contact information if you want to reach out to me later on. I'm happy to receive emails and calls and to assist you where I can. And otherwise, I think I'm turning it over to Terry next. Is that right?
That's correct. Chad, can you stop your screen share though? Thank you. Good afternoon, everyone. I'm Terry. I'm from Douglas County, and I'm going to kind of go through some of the practical things that we need to think about as finance officers. We also have the technical side that Chad's gone over with. And one thing I was thinking of as he was talking was if we have subrecipients, we need to make sure that their closeout date is before our closeout date, because you don't want to come down to the wire and then have to get their reporting and get everything in. So I think some important considerations: look at your policies, make sure that they're up to date, including subrecipient monitoring for the grant, for your grant policy, make sure that that's up to date. And typically our auditors want to see that we have a cash management component of that grant policy. And just remember that anyone that you pass money through to is held to the same guidelines as your agency. So whatever's in the state requirements for us, we need to make sure that they comply with that. And procurement purchasing policy, you know, take a look at your purchasing policy of your county, make sure it includes references to the following federal guidelines. Documentation, talk to your legal team right now, like now. We're actually working on, I'm working with our legal team to get a subrecipient agreement that we will have all of our pass-through agencies sign when we hand over money to them. That will very clearly state their expectations. And I'll be sending, once I get that draft, I'll be sending it to Dagny to send out to everyone. Meet with key players in your other departments. We have decentralized purchasing, so a lot of times I see things and it's already happened. So I'm going to schedule a meeting and talk about the requirements and the documentation needs. Purchasing requisitions and invoices, they should really clearly identify how this expense is related to COVID-19. I'm telling my departments, write me a note, use your words, explain how this particular purchase, because in 6 months or next year when I'm being audited, nobody's gonna remember unless we write it down. So expenses, and Chad already talked about that. Expenses must be used for actions related to that. But I've seen some purchases come through from some of my departments that I didn't, on the face of it, you would think that's not COVID-19 related. When I've called the departments and inquired, why did you, because we have a specific project number for our COVID expenses, and I've asked them, how does this relate? And they've given me a very good explanation, but it wasn't on the invoice when it was submitted. So documentation is going to be key. Audit documentation, as Chad mentioned, get in touch with your auditor now. Considerations to be discussed. What do they consider the award date? Which years are they going to be conducting the single audit in? How are we going to handle our expenses for fiscal year 2019 and 2020 with an award that's dated in 21? There's not just one CFDA number. There's one for this particular pot of money, but like our airport got a small CARES Act award, and that happens to be a different CFDA number. So your auditors will be able to provide that information. There are multiple CFDA numbers. This is a chart I put together for purchasing, and you can see there's a lower level and then another level for micro purchase. And when in speaking to our auditors, what happened was the guidelines were changed in November 2019 by NDAA, which is National Defense something, but it has not been codified into the OMB guidance. So the OMB guidance, official guidance, actually is still at this lower level. So a micro purchase is 0 to 3,500, but under the NDAA guidance, it's up to 10,000. And if anybody would like a copy of this chart, just email me. I'd be happy to send it to you. So you can see that I'm not going to go through them, but there's different levels of authority, and any amount really you can do a non-competitive proposal. But I would caution you, you have to be able to identify why it was only available for one source. A lot of times I see that, and by the time we get the audit done, I don't have that documentation. So again, if you have other people out in the departments that are doing purchasing, make sure you have that documentation as to why they couldn't get more than one quote. And our auditors made sure to let me know that there is no local purchasing, no local purchasing preference under federal guidelines. So that's another consideration. On general guidelines, purchases must comply with your agency's purchasing policy and NRS. Purchases must be deemed necessary to carry out the goals and policy of the CARES Act. Purchases must be made with open competition to the extent required. Must comply with conflict of interest laws. Purchase documentation contains a sufficient and proper history of the purchase, and again, no local preference. So one thing, and I'm going to talk a little bit about suspension and debarment. So anyone that you're contracting with or people you're passing money through, you must be able to demonstrate that you have checked the excluded parties list system to make sure that you're not contracting with someone who's been suspended or debarred on the federal level. And that does apply to pass-through agencies. So I've included the link here. Another method would be to have them request a certification from the particular party, or you can add language to your contract that they're stating that they are certified. And the easiest way to do this is to attach a screenshot of the verification to the contract or the agreement when you're doing it. A lot of times I've seen where people do this, but they can't demonstrate that they did it. So the auditors will come, well, we need to prove that you checked the list. Well, they did check the list, but we don't have a screenshot or something that shows that. So again, include that screenshot with the contract or agreement. This I got from a FEMA procurement, top 10 mistakes for federal procurements: restricting full and open competition, not performing detailed price or cost analysis, engaging in sole source procurement without documenting the emergency or situation, continuing work under a sole source agreement even after the urgent need is ended, not making or not documenting all the required steps, awarding a time and materials contract without a ceiling price and documenting why that was suitable, not including required contract clauses, awarding a cost plus percentage or percentage of construction cost contract, awarding a contract to contractors that are suspended or debarred, or not documenting procurement steps to answer questions that will arise months or years, because we don't know when the Treasury might come wanting to audit. Here I've listed some resources, Treasury guidance, and the procurement guidelines are from the basic OMB guidance, and I will make sure that you have that link as well. Grants.gov has a great learning grants module, has a lot of really good information. And I also want to let you know, if you're facing the single audit for the first time, or perhaps you're going to have extended costs beyond what you had budgeted, that amount is eligible for reimbursement under the CARES Act. So with that, I'll turn it over to Gina, and I thank you very much. Thank you for the opportunity.
Okay, first of all, can everybody hear me okay? Okay, I am going to share my screen. And everybody should be able to see that now. It should say nonprofits. You can see that okay? Is that the right screen, Terry? Okay. All right, so we're going to talk about nonprofits here today. So as mentioned by Chad earlier, you can share some of this CARES Act dollars with nonprofits. So you may have some in your community that have been impacted by COVID-19 and who can provide services to those who have been impacted. So you can share this money, but you will need to determine that that nonprofit qualifies for these CARES Act funds. So you're going to have to take each one of them. You're just going to have to break them down, examine the services and what their expenses could be for. And they are going to have to meet the exact same requirements that you are going to have to meet, and providing any type of PPEs or whatever during that time. But a lot of these nonprofits will not have a lot of experience probably with dealing with any types of these audits. So I would recommend developing a form, and this is just a similar one to one that was sent out earlier, I believe last week, by Dagny. and just kind of create a real simple form listing those categories and what they're going to be spending. And I would suggest getting this out to them in the beginning, just like what the governor's office has asked us to do, kind of break down where those needs are so that you can evaluate to see if this is something that you can help them out with. And then, as both Terry and Chad have mentioned, these nonprofits are going to be subject to the exact same monitoring requirements that all of us will be. Sometimes these nonprofits just don't have a lot of staff on hand. So, you know, that might be part of your determination on whether you're going to be able to give them that money or not, is if you don't feel that that nonprofit is going to be able to stay on top of that reporting and get everything to you, that risk comes back on you, and you could end up with audit violation. So you kind of have to take a look at that too. It may also require additional work from you by staying on top of that. So the other thing you need to look into is find out if that nonprofit is already receiving federal funds. Because if they are, say they are for a program and that program was shut down during the COVID-19 and they ended up redirecting some of those funds to help pay for some of those expenses, then they wouldn't be able to qualify for this, because that would be double dipping, and that's not allowed. And then if you do choose to grant with a nonprofit, as mentioned earlier, document, document, document. It is so important to be able to have all of that documentation. You know, in a year from now, when our auditors step into our offices and want to start putting everything together, like Terry said, get those screenshots, get it, make for sure you've got everything in that documentation. And you know, you can use this money to hire someone to help you stay on top of this. So if you don't have someone on staff, maybe there's somebody retired in your community that would be interested in coming to work for you for these next few months to stay on top of this, then you could include those expenses. It would be worth it to be able to do that, just so that you can stay on top of this on the beginning, and not, you know, in a year from now trying to pull everything together. So my presentation's pretty short and sweet. I let Chad and Terry get all the meat and potatoes out of the way, but I'll recap. So counties can help out your nonprofits and community organizations. It's going to be up to you to determine that they qualify. It's going to be up to you to make for sure that they're not already receiving federal funds. And it's going to be up to you to subrecipient monitor them, and just document, document, document. And that's all I've got.
Okay, Gina, Terry, and Chad, thank you so much for those presentations. So we'll go ahead and open it up for questions. We can do questions for a little bit. So does anybody have any questions or want to start a conversation about anything that maybe our presenters could elaborate on a little more?
Hi, Dagny. This is Elizabeth in White Pine County.
Hi, Elizabeth.
Hi. Hey, does anybody know whether or not these funds can be used to match other federal programs? Because I know certain federal programs allow matching. Is there any restrictions on that? Have we seen guidance on that?
So this is Dagny, and so if anyone knows more can correct me on this. Here's what I know is that it can be used for your FEMA match, your 25% FEMA match. Beyond that, I do not know if it can be used for any federal dollars. I think if other federal dollars that you may receive may have a restriction that their match may not be met with other federal dollars. So I think it would depend on that individual grant, and as well as, of course, the parameters of the coronavirus relief funds that we've gone over. But beyond that, I do know for sure you can use it for your FEMA match, but I think it would depend. Does anyone have anything else?
This is Terry. It does call out FEMA. Very specifically in the guidance, it only speaks to FEMA matching, so.
This is Leslie. That's what we're aware of as well. We've been definitely keeping it to the FEMA match. Most of the other federal funds will have restrictions that won't allow that to be combined. And not only that, but part of the guidance clearly says, you know, you can't do that. So we've been keeping it pretty much to, you know, keep it to the federal or the FEMA match. If for whatever reason we were to decide where there was a combination we were trying to recoup, maybe a 50-50, we would have to take the whole entire thing and cover it with the CRF, not mix it together. I don't know if that was clear, but it would be an all or nothing type reimbursement for a qualified reimbursement.
And I see a question from Kim, Kim Todd, I believe from Eureka County. Correct me if I'm wrong, Kim. She says, I know this has been asked before, if the CARES funds pushes a county into a single audit, can the CARES funds be used to pay for that single audit requirement? That's a good question. One thing that we have been saying is that if you need additional capacity to manage these funds, so not only the tracking, but also the audit, that is an allowable use of the CARES funds. Alan will go into that in a little bit. For those small counties where all of this tracking and compliance sounds like a lot, we would encourage you to hire someone to help you do that. And again, that's an allowed use of these funds. So I would say that if the primary reason for your single audit is these funds, that would be a yes. Terry, did you have more info on that, or can anyone else add?
Yeah,
That's my understanding as well.
yeah.
But this is Gina, but the hard part about that is we're not going to have that audit for a year from now. So Terry, how are we going to do that when we don't even know how much the bill is going to be?
That's something you would probably need to talk to your auditor about, but I would have an audit contract proposal already. So maybe have them do a proposal now for the work that they're going to do.
Yeah, I agree. I was just thinking about that because the funds have to be expended by December 30th. But if you're in contract or an expense for this calendar year and you don't pay the bill, into next year, that's okay. You can still be paying that bill into next year, but the funds have to be expended and for an expense this year. So perhaps that would be the way to do it, is to pay for this audit that would be triggered as because of receiving the COVID funds this calendar year. I hope that was clear.
This is from the Treasury guidance. So it says yes, but we'd have to work out the details of how it does.
Any more questions or discussion on that?
And I just thought of one other thing too I was going to mention. I was speaking with our auditors this morning. It is also important to remember that federal funds don't get that same exemption that the NRS gives for like professional services and some of that other technical type equipment. So NRS 332.115 will not apply for these federal funds. You need to try to make for sure you get your multiple requests for cost quotes.
Right.
Can you explain a little bit what that is, Gina?
Sure. So there's a section in NRS 332.115 that does allow you to not get competitive bids for certain law enforcement items, computers, professional services, and these federal funds do not get that same exemption. So even, so you go back to those dollar thresholds that Terry showed out. So depending on where you're at, if it's a micro purchase or a small purchase or whichever, you do still have to try to attempt to get those certain numbers. More than one is usually the number of quotes or requests for price, and document them.
Terry mentioned this, and then we talked about it briefly also, and I just want to clarify that procurement chart, Terry, that you developed, that's something I haven't shared with this group. Is that something that Well, now I'm asking you in front of everybody if you're
Sure,
okay
yeah,
with
no,
sharing
I
that.
said I could. I'll send it in a PDF to you and you can send it out to the group.
Okay, and then I know the other thing we discussed was a template for the nonprofit agreement. And I know probably it went back and forth in emails between the four of us presenters. If one of you guys could send that to me, I will send that out to the rest of the group. Or Terry, is that something we were waiting for review on?
Our district, I had a template, but it was from another agency that I found. And our district attorney's office is customizing that for our use, and I'll share that with you as a template when it's ready.
Okay, then everyone, I'll send out those two things later this week, the list of the procurement rules and thresholds, as well as the nonprofit template, when we get those from Terry and from the Douglas County DA. And thanks, you guys. Well, thanks for all of this information, but thanks also for working on that form and helping us with some tools that we can share with everyone. Do we have other questions?
And I just had one other comment for some of the smaller counties, especially if you haven't had a single audit before. If you do not have a procurement policy, written policy in place, I cannot emphasize enough how important that is. And I'm sure reach out to any one of us who, I know Josh Foley's on the call here. He and I have talked about it. Terry, reach out to any one of us and we'd be glad to share what we have as well, because you do need to have something written in place before your auditors show up on your doorsteps.
Just to add to what Gina said, there are a handful of written policies that are required. Procurement is one of those. Cash management is another, and then there's a few others that I don't have on the top of my head right now, but you want to look at that, have those in place as you administer federal funds.
What I'd like to do is go to Alan, who will talk about the contractors that he researched for those small counties who might like to hire someone to help you with this. I'll turn it over to Alan, and if anybody else has any questions or any other information they'd like that they can think of, we'll give you another opportunity after Alan speaks. The document that Alan will be referring to, I did also include in the email that went out to everyone earlier.
Thank you, Dagny. This is Alan Kalt. I'm the fiscal officer for NACO. What I'd like to do is give a shout out to Dagny for putting this workshop together. Her and I and Vincent talked about this briefly. We've worked really hard to get the three presenters. Thank you, Chad, Terry, and Gina, for coming forward, stepping up, and providing this information to the members. You know, and I think as Gina had talked about, it's so important that members helping members and counties helping each other to get through this, and the sharing of information is so, so critical. You know, Chad talked about being on the same page with your independent auditors. And as Dagny and I talked about it, you know, some of the smaller entities may not have the staff, the time, or the expertise. So she asked for me to research some of the best firms in the state of Nevada. And so I contacted 3 different firms who expressed a willingness to consult related to the CRF funding that the local governments receive from the state of Nevada. These firms have experience auditing Nevada local governments. There's other additional firms not included on that list. If you want to reach out to those folks, you know, go ahead as well. But these are 3 firms that I personally have experience and know their background and would endorse. The first one is Casely Nealon and Associate. Nikki Nealon is a managing partner, extensive background in local governments. Ide Bailey, Kurt Schlicker. Kurt serves on the Ide Bailey National group that deals with CRF funding. He's out of the Reno office, and Ide Bailey does a lot of local government audits. And of course, Chad, you know, with Hit and Verdict, they have many, resources available. They audit many local governments. You know, I think it's really important that we understand that we may not be able to use, if we're using consultant to get into the weeds and help us with the day-to-day operations, it needs to be somebody different than our independent auditors. But at the same time, it's going to be so critical that these consultants work with your independent auditors to make this a very smooth transition, because we want to make sure that we provide the state of Nevada all of the documentation that they need so that there's no exceptions at the subrecipient level, and that the state of Nevada has no exceptions going back to the federal level. As noted, CRF funding can be used to pay these consultants to keep you on track and to keep you out of trouble. There's some tight deadlines. You may not have staff or the expertise, so there's 3 different firms available and to assist you in your efforts. And that's basically all I had to say, Dagny.
Thank you. Last call for any questions or other discussion items for the group. Okay, I'll just give one more plug to everyone on the use of these dollars. You know, this today was in the weeds, and that's all most of your bailiwick anyway on this fiscal stuff. But I just want to say how important it is that we received these dollars. First of all, you know, we lobbied the governor's office on this. NACO did for a while, and it was up to the state to provide these dollars to counties, and they decided to do that. And so we are very glad that they did that. And, you know, it's important to spend the dollars so that you can recoup all of the costs that you have expended for COVID response in your communities, because counties are doing a lot of that local response, keeping people safe. So, you know, I know for us, especially some of the smaller counties, this sounds like a lot, but it's so important so that we could use these dollars, provide the services that counties do, and then of course, help the folks in your communities with everything that's happening from COVID, including the businesses and your nonprofits, to make sure these funds trickle down and help folks and keep Nevada strong as we try to get through the rest of this year in the midst of this pandemic and sort of the ongoing impacts that we're seeing. So we hope today was helpful for everyone. Again, it'll probably take us about a week, but we will have this video up on our website along with the materials, or just email me directly and I can send you a link to it. I want to thank all the presenters, Chad, Terry, Gina, and Alan. Thank you so much for working with NACO and helping us put this together, and Vince as well. And thanks everyone. Don't hesitate to reach out anytime with any questions or anything that NACO can do to support you. Have a great afternoon. Thanks.